Imagine starting out as a young paperboy and ending up as one of the wealthiest, most respected investors in history. That's Warren Buffett's story, a journey filled with determination, challenges, and wise decisions that took him from humble beginnings in Omaha, Nebraska, to global success as the Oracle of Omaha. Warren Buffett was born on August 30th, 1930, and his business journey started early. At just 6 years old, he was buying 6 packs of Coca-Cola from his grandfather's store and selling individual bottles to his neighbors for a profit. By 11, he'd saved enough to buy his first stock, 3 shares of Citi Service preferred at $38 each. The price soon dropped to $27, only to rise back to $40. Nervously, he sold the stock quickly, making a small profit. Little did he know that if he'd waited a bit longer, he could have sold each share for over $200. Buffett learned one of his most important lessons: patience, a principle that would stay with him his whole life. Buffett didn't stop there. By high school, he was running a profitable paper route, making $175 a month, a remarkable amount for a teenager back then. With his earnings, Buffett saved for bigger investments. He partnered with a friend to buy pinball machines and placed them in local barbershops, sharing profits with the shop owners. The business was a hit, and after a year, Buffett sold his stake for $1,200, a huge sum for a teenager. After high school, Warren Buffett attended Columbia Business School, where he studied under legendary investor Benjamin Graham. Graham introduced Buffett to the concept of value investing, buying strong companies that are undervalued by the market. Inspired, Buffett took this approach to heart, returning to Omaha to start his own small investment fund, determined to put these principles to work. In 1965, Buffett made a life-changing decision when he took control of a struggling textile company called Berkshire Hathaway. Initially, he planned to make a quick profit and move on, but after a disagreement with the owner over the buyback price, Buffett grew frustrated and bought the entire company. He later called this an emotional decision, but rather than cut his losses, Buffett saw potential. He transformed Berkshire Hathaway into a holding company, using it to buy businesses with real promise. In 1967, Warren Buffett made his first major purchase outside of textiles by acquiring National Indemnity, an insurance company. This decision marked a turning point, as insurance provided a steady flow of cash, or float, which Buffett could invest in new opportunities. Over time, he added other insurance companies, including Geico, laying a foundation that allowed Berkshire to expand further. As Buffett built up Berkshire's portfolio, he faced his first major economic test during the 1973-1974 recession. The market was in turmoil, and many investors were selling stocks at a loss, with Berkshire's stock price dropping by nearly half. But Buffett saw the downturn as a chance to buy strong companies at bargain prices. This bold move helped set Berkshire Hathaway on a path to growth, proving his belief that challenges can become opportunities with patience and courage. In the 1980s, Warren Buffett made several big investments, including a $1 billion stake in Coca-Cola. Recognizing the brand's global reach and power, Buffett's investment in Coca-Cola became one of Berkshire Hathaway's most profitable decisions. Soon, Berkshire's holdings included American Express, Gillette, and other iconic companies, cementing Buffett's reputation as a strategic investor. In the late 1990s, Buffett's patience and discipline were tested again during the dot-com bubble. While investors flocked to tech startups, Buffett chose not to follow the crowd. He avoided the frenzy, explaining that he didn't fully understand the tech sector. When the bubble burst in 2000, Berkshire emerged unscathed, and Buffett's decision to stick to what he knew best only strengthened his reputation. Then in 2008, Warren Buffett faced the global financial crisis head-on. As major banks and institutions teetered on collapse, Buffett made bold moves, investing billions in companies like Goldman Sachs and General Electric to help stabilize them. His calm, strategic actions during the crisis helped these companies recover, and Berkshire Hathaway gained significantly as the economy bounced back. Buffett came out of this period stronger than ever. From those early days selling soda, Warren Buffett's journey has been marked by incredible financial growth. He started with just a few $1,000s saved from his childhood ventures. Today, Buffett's net worth is estimated at over $100 billion. And under his leadership, Berkshire Hathaway's stock price has grown from $19 per share in the 1960s to over $500,000 per share today. With his success, Buffett became dedicated to giving back. In 2006, he pledged to donate most of his fortune to charity, primarily through the Bill and Melinda Gates Foundation, aiming to use his wealth for positive impact. Warren Buffett's story isn't just about becoming rich. It's about making steady, logical decisions, learning from every experience, and staying true to your vision. From selling soda as a kid to building a billion-dollar empire, Buffett's journey reminds us that true success is built on resilience, patience, and a willingness to learn and grow.